I'm selling my car, my truck, my house.
Bitcoin is the currency of the resistance.
Paying for something
in
without
exchange for real currency.
Bitcoin's still making money for investors.
Being called the future.
I give my real dollars to Bitcoin.
I think that Bitcoin is in a range right now between 25,000 and 31,000. I don't think it's going to go lower, and certainly not a new low. This is my thoughts on it, right? 10 years from now, when Bitcoin is $763,000 or whatever, 7.3 million, 10 years from now, is it going to matter if you got Bitcoin at 19,000 or 25,000? Do you think it's going to matter? Those are my thoughts. It's a really good place to DCA. We're at the bottom of the range, and fear is very high right now. As you can see, 34. It's not like crazy fear, but it's definitely fear. But that's a good place to be DCAing. Liquidity crisis, we've been in a liquidity crisis. And that's going to continue to get worse until the institutions are forced to adopt XRP, XLM, all these like really fast cryptocurrencies that will solve their liquidity crisis, which is why Ripple is called Ripple, because liquid. It's liquid. The housing crisis is not as real, or crisis and crash are different. So there is a housing crisis, as in like unaffordable housing. The reason that there's not going to be a crash, there's a significant portion of homeowners that have equity in their house because they got interest rates at like 3% or 2.7%. People have equity in their house, and even if they don't, like, you're not going to, like, I'm like this. I have like 3% on my house. Like, I'm not selling this thing ever. But there's a significant portion of people that have equity in their house. It's not like 2008 when they were just giving strippers 4 or 5, 6 house loans. Like, it was very difficult to buy a house. And so because they made it so difficult, and because the interest rates were at a record, like literal record rates, there's a huge portion of Americans who have equity in their homes. And even if they don't, they have a fixed rate. It's not like 2008 where they had variable interest rates. That's what screwed everybody in 2008. It was 1 month you were paying 500 and the next month you were paying 5,000. Everyone right now mostly has a fixed interest rate. It's set in stone. The only housing market that might be in trouble is the commercial. I went on offense too early, and I knew winter was coming, but I went on offense too early, and so I have a huge mining farm. Like, I've kind of talked about it a little bit, but I have over 28 GPUs, and I have some ASIC miners, I have helium miners, I have Chia miners. So I have a really big Bitcoin mining farm, and I wanted to expand that. And my plan was to work on my infrastructure, which I did, to take some of my profits, and I wanted to get to renewable energy, not because like I'm a tree hugger, I don't hate the environment, but it was more of a practical thing, like just paying myself. So I wanted to go solar, which I'm just now working on that. So for me, the main lesson that I learned from the last bull run was to go, whatever you think you need for winter, like double it. You know, winter's coming. Whatever you think you need, double it. And I was going too aggressive on expanding my farm, and I knew better than to do that. So that was my own personal, I don't want to call it failure, but that's what I would have done differently. I would have waited longer to expand my farm, and I would have focused more on the infrastructure, getting the power correct, where I'm just now doing. That's what I have personally learned from the last bull market into the bear market. If you want to learn how to trade, you can do so for the price of a cup of coffee. All right, I appreciate every single one of you guys.